Well, we are now hearing that American Express has partnered with Coinbase for their first Bitcoin-backed credit card. We're going to be discussing this along with many other topics in today's video, and really it all revolves around where we are in the cycle, something I've been talking about for quite a while now. Just last week on the video, we called the top of the market. Now, it may not be the Pico top of the market, but we are calling basically the top. Based on all of the metrics that we discussed in that video, you can go watch it. It's called The Bitcoin Top is In. Just type in the Cryptoviser, The Bitcoin Top is In. But in today's video, we're going to be exploring what else is going on in crypto, why I believe they are very bullish indicators, but I think that they're bullish more for the long term. And so what the market does is the market prices in a lot of, the expectations for where crypto is going. But now we're starting to see news events, right? In previous cycles, we had announcements. So they would say, in 3 weeks, we're going to be making an announcement about another date that we're going to announce a new product. And just based on the announcements, the prices of these projects would go up, or the stocks of the projects that were going to be integrating crypto, but they would draw it out for like 3-4 months. They'd say next month we have a big announcement, and then the following month they say the announcement is going to be something to do with a crypto, but we have the full announcement coming out next month. And then you'd wait another month, and they'd say now we're going to be adding a crypto to a payment, and we'll tell you about it next month. And they just kept drawing it out, right? And they would just keep riding the price up. We as investors have to take a step back and really understand where this market is, where the market is going, and where we are generally speaking. Because like I've said before, we're not trying to call the top of the market or the bottom of the market. Now we do kind of theorize and predict these things, but this is just based for our strategy and our thesis. So we have at least some timelines to look at to say, did we get validated or invalidated with our thesis? And by the way, the thesis changes on a regular basis. We're going to be talking about that as well in a little bit. So make sure you guys are subscribed to the channel. Don't forget to give this video a free thumbs up. Hit that subscribe button. That way you never miss a new video. Thumbs up are free, but crypto is not. Now, I want to bring you back to 2017. That's when I first started learning about crypto. Many people started learning about crypto. This is when Bitcoin really started to enter kind of the mainstream narrative when we're talking about investing. This was from December of 2017, and it says Bitcoin debuts on the world's largest futures exchange and prices fall slightly. Well, now looking back, what actually happened in December of 2017 was the first Bitcoin futures contracts. Now, these were on the CME exchange and the CBOE exchange. And generally speaking, again, I was very new to crypto, very new to investing, very new to this whole financial world. And, I was kind of caught up in the hype cycle. I mean, that's literally the reason that we started this channel the following year in 2018 to really go over my investment journey and bring you guys along for it. So again, I'm not trying to convince you of anything. I'm not telling you what to do in your portfolio. I'm just letting you guys know, where I think we are based on all of these metrics. And so in 2017, everybody saw this as a very bullish signal. Oh my God, we got Bitcoin futures. Now it's on the stock market. This was literally the Pico top of the market. Go look at the top of the market in 2017. The day after they launched this Bitcoin futures product, the market started falling and we entered a bear market. And by the way, they kept the futures contracts running for a few years into the depths of the bear market. And then when we were at the bottom of the market, they stopped the Bitcoin futures. They said, we're not really making any money. There's really not interest. And it went away. When the Bitcoin futures stopped, guess what happened? Bitcoin rebounded. And that brought us to 2020 and 2021. Well, what happened in 2021? This was in October. And I posted a video in October of 2021 saying, they are now launching Bitcoin futures again. And by the way, Bitcoin futures they don't actually touch the actual Bitcoin. So it's just derivatives. It's just paper betting on what the underlying asset is going to do. And so, yeah, Gary Gensler and the SEC hated crypto. We all know that at this point. But meanwhile, they approved Bitcoin futures in October of 2021. And I told my viewers then, I said, this is a warning signal to pay attention, because last time they launched Bitcoin futures, that was the top of the market. They utilized these products to push the markets down. Nobody listened. People said, Cryptoviser, you're an idiot, this and that, for months. And what happened? 2 weeks after they launched this, that was the top of the market in the beginning of November 2021. And I told my viewers just a few months later on my video that I was selling crypto. And they're like, no, Cryptoviser, we have an extended cycle this time. The bull market is going to go till June of 2022. What are we hearing now? We're hearing the same shit. Everything is the same. Everything. We have everybody saying Solana ETFs are going to be approved. XRP ETFs are going to be approved. Avalanche, everything is going to be ETFs. Everybody's approving the ETFs. But guys, they need to launch these in the bear market for them to be bullish into the bull market. You're waiting until literally all-time record highs have been hit 3 times now, right? We had 105, then 109, then 112. 3 all-time record highs. And now we're starting to see people getting bullish about the ETFs. When others are bullish, what do we need to do? The opposite. We need to be bearish. And that's exactly what happened in 2017. That's exactly what happened in 2021. And I personally believe, again, this is my opinion. You may not agree with it, and that's fine. I want to hear your side. I'm open to changing my opinion on where the market is and my analysis. But I need to know why, right? People just write in the comments sometimes, Cryptoviser, you're wrong. And I'm like, okay, about what? I mean, these videos are 50-minute long, and they'll say, you're wrong about that. And I'm like, what is that? We talk about a lot of things in these videos, right? Anyway, most of you guys get it. And I think that most of you who watch my videos understand, whether you agree or don't agree, whether you're moving your investments based on the analysis, that's up to you. But this is, we are getting a lot of the same signals from previous cycles, right? The extended cycle nonsense. They love that because while you're not worrying, you're like, oh no, we have an extended cycle. Just keep buying the dip, keep buying the dip, keep buying the dip. And meanwhile, when you're buying the dip, who are you buying it from? Those billionaires that are selling their coins because you are then the exit liquidity. Because by the way, what we're going to be kind of getting into in a few minutes here is Wall Street is not focused on any of these altcoins, right? All these billionaires pushing all these altcoins. Oh, SWI, I love SWI. Nobody on Wall Street loves SWI. Nobody cares about SWI. Nobody's thinking about SWI, period. It's all in the degen world, right? The people who are in crypto who just kind of go after these long shot cryptos that basically have no actual fundamental value because they're not being used by anybody or even tested by anybody. That's why I bring up a lot of the companies and a lot of the cryptos that are being used and looked at and focused on by Wall Street and the big money. But anyway, that brings us to this. Coinbase is seeing a bullish crypto outlook for 2025, but flags systemic risks from leveraged corporate Bitcoin bets. So people say, Cryptoviser, you're wrong. I'm like, wrong about what? Oh, well, MicroStrategy is the best possible investment. Even though Michael Saylor is telling you, like, he's not like going around about. He's literally directly telling you, don't buy MicroStrategy, buy Bitcoin, right? They're using MicroStrategy to get corporations, investment firms, BlackRock, right? They don't care about my and your money at MicroStrategy, right? They're going at BlackRock's money. And BlackRock's money is effectively the government money, right? I mean, that's government's pushing money in. They own some of BlackRock and also retirement funds, right? So it's kind of like just the nation in general, kind of a fund for the nation because a lot of people are invested in BlackRock related products, right? And so they're the ones who are funding this MicroStrategy play. That way, the government doesn't have to actually hold the Bitcoin. They don't have to actually hold the Bitcoin, right? They have a Bitcoin ETF product, but that's for trading, right? Because you can trade it. MicroStrategy, they're holding these coins potentially forever, right? And they're going to do other things with it. They're going to do what the banks are doing with our cash, but they're going to be doing this in the new DeFi world of digital finance, right? And so Coinbase is telling us there are leveraged bets that can create systemic risks. The same things that I've been talking about on this channel for a long time, guys. And there's a lot of people who still don't. I don't understand how you don't see the risk in what MicroStrategy is doing, and now other companies are following. Now, again, if they were doing this in the bear market, I wouldn't necessarily have an issue with it. They're all doing it at all-time record highs. Anyway, so basically, Coinbase Institutional believes that there are risks, but these appear manageable for now. They said they continue to expect more upside in the crypto market over the next 3 to 6 months, which puts us at the end of 2025, forecasting new all-time highs for Bitcoin in the second half of the year as macro disruption from tariffs fade and pro-growth U.S. policies take shape. However, rising long-term yields driven by concerns about deficits could tighten financial conditions and unsettle markets. If growth expectations disappoint, risk assets may face volatility, though store of value assets like Bitcoin and gold could benefit as the dollar's dominance declines, according to the Coinbase executive, right? And then I don't know what's going on today with these websites. They're like loading very oddly. I don't even know if we're going to be able to get through this. Okay, here we go. So basically, a growing number of public companies are embracing the Bitcoin-backed balance sheets, with 228 firms now holding a combined 820,000 Bitcoin. Think about that. 228 firms already hold Bitcoin. So every time you hear other people saying, oh, well, this company's buying Bitcoin, because we're hearing a lot of this, right? We're hearing about these like companies in Japan buying 5 Bitcoin and announcing it. It's like every time I buy or sell or go to the gas station and get some gas or get a coffee, I'm not announcing it to the world like, oh, just bought my first coffee of the day. And that's what they're doing with Bitcoin, right? And I know why they're doing it. They're doing this because they want the valuation of these companies to be viewed differently. But now it's becoming the norm, right? And not only is it becoming the norm, but now you have another company coming in and saying they're going to be buying Bitcoin, and everybody's excited about it. And yes, this is good, but are they buying or they buy, right? Because there's a big difference. GameStop bought. They're not buying. MicroStrategy is buying. And so we have to understand all these companies that are buying all this Bitcoin, right? What happens if the price of Bitcoin drops by 50% from where we are today? Okay, $105,000. So 50% drop would be about 52,000, right? And so that 52,000 would be significantly below MicroStrategy's buy price. And so what would that do to the MicroStrategy stock? What would that do to the fear in the market? It would cause a lot of fear. These are risks. And I'm not saying, I'm not bearish. I'm bearish because I believe that we're going to enter a bear market and we have hit the top of the market, effectively. And so this is a very risky time because at any point we can transition into the bear market, right? And start rotating. And once that rotation starts, buying the dip is a very, very bad idea because you will not recover that potentially ever, right, at those highs. And so I think definitely the further we go, the closer we are to that point. I just don't know when that point is going to be. But Coinbase is flagging these risks as well. And there's people in the crypto space that are like, nope, not a risk, not a risk. Like I said at the beginning of the video, American Express is now partnered with Coinbase to launch a Coinbase One credit card, and you're going to be able to get up to 4% back in Bitcoin. Now, we don't know all the details of this. It may be in specific categories. We know American Express is really big on that, where like dining maybe 4%, or it's similar to the Gemini credit card, because Gemini has a credit card as well, where you can get crypto back in any of the cryptos that they support, which is also pretty cool because, like, for instance, on the Gemini card, if you're going to be making purchases and you see, today Bitcoin is down 50%, let's just say, I'm going to start earning rewards in Bitcoin, right? And then let's say Bitcoin's at all-time record highs, which it is, but Ethereum hasn't hit all-time record highs and you're bullish on Ethereum, well, then you can switch like immediately. And then you'll earn whichever other currency, which is amazing. And I think that Gemini has like a few of their categories are 3%. I think gas and electric charging is 10% or something like that. But either way, what company backs it? I don't know if it's Visa, MasterCard, or American Express. I'm not sure. I don't think it's Amex because this is the first card for Amex. But listen, I mean, if you have Coinbase and you're thinking about it, or Coinbase One, I should say, which is their subscription, this may be a good, thing. But again, they're launching this at the top of the market, right? Just it kind of indicates another top signal, right? Even though it's a positive thing. We're also now hearing Coinbase added a former top advisor as they're broadening their political reach. And this is a top Democratic strategist who's joining Coinbase and as an advisor to the exchange. But there's a lot of concern about this from people who say that a senior advisor to Kamala Harris's presidential campaign is joining Coinbase's Global Advisory Council. And so this would, this is kind of opposite where the current president's viewpoint is on this. So there's a lot of criticism about this from Coinbase. And it could indicate, especially if, we know that Trump and the Trump family is very pro-crypto, but they may be pro-crypto and become a little not so pro-Coinbase. And this could also indicate kind of a turning point where, the markets kind of overhyped everything and kind of did anything really change in the global landscape. I mean, again, going back to the ETFs at the beginning of this video, we're still waiting on Solana ETF, XRP ETF, all these different ETFs, which I'm sure will be approved at some point. But I think a lot of people anticipated that it was going to be approved already, especially like Ethereum staking or just the Solana ETF. So these are just some things to keep in mind. Now, another thing that I saw with this whole Bitcoin treasury company thing is crypto influencer Anthony Pompliano is set to launch a Bitcoin buying vehicle. He is poised to become the CEO of a group that will seek to raise $750 million to buy digital assets. Now, here's the deal. I think Anthony Pompliano is a very smart business person. I don't really have anything against him. I think that he's a Bitcoin maximalist. We know that. But here's the deal. Like, again, he's launching this at the top of the market. Like he has to know that we're at the top of the market. And maybe this is just how Wall Street gets money, right? At the top of the market, everybody's spending, everybody's super bullish. So they're capitalizing on that and launching everything and making announcements and partnerships and launching things. But I still think that these Bitcoin treasury companies, like if I was Anthony Pompliano, I would raise the money now and buy in a bear market, which is potentially within the next 12 months, at least temporarily, right? We've kind of gone over the timeline that I think is going to happen. End of 2025 into 2026, probably downward trend in the market. And then potentially at the end of 2026, a big pop higher, and then potentially, continuation of the bear market until probably around late 2027, early 2028. Remember, the next Bitcoin halving is 2028. And so we have to start anticipating how the market cycle is going to move. But this doesn't make sense, right? Pompliano launching this at the top of the market, even if he thinks we're going to go higher after this, right? I don't know. It just seems timing wise, the 12 to 18 months after the Bitcoin halving for them to be doing this, it's the same thing in the last cycle, right? All the influencers were pushing, BlockFi, Celsius, 3 Arrows Capital, Terra Luna, all these things. I mean, Novogratz got a tattoo for Terra Luna, and it was a complete and utter failure. And so we have to understand these are signals. All of the signals put together, to me, say we are towards the end of the bull market. And by the way, people who say, well, we're not at the top, right? So when are you going to know it's the top, right? Because most of the people who watch my videos, these people are not like, well, I would say people who watch my videos are probably more in tune with the market than like people on Wall Street that just, remember the video that I showed you the other day of Saifedean Ammous, who's a Bitcoin expert and basically warning that we're potentially at the top of the market. And the interviewer was like, wait, you think we're at the top? And he was like, well, we're in the 12 to 18 months after the Bitcoin halving. And historically, that is when Bitcoin peaks out. I mean, you could look at that on the halving tracker, which shows you this cycle versus previous cycles. And she goes, well, we're going to hit 200,000, right? And it's like, when I hear that, I'm like, no, we're not going to hit it. Because if you just believe that we're going to hit 150 or 200,000 just because that's your thesis, just because everybody's bullish, most likely we're not going to hit it. Because the other money, the smart money, they're going to get out way before. We saw this in the previous cycle. in around this time of the year in 2021, Elon Musk was going on Saturday Night Live. For Saturday Night Live, the Dogecoin community took it as, oh, well, he's going on Saturday Night Live to pump Doge, and he's going to say something about Doge going to the moon, and we're going to hit $1. Well, none of that happened, and including the dollar Doge, we went to 70 cents, and then all the smart money, all the traders, rug pulled everybody who thought it was going to $1. And around that time, I remember people were putting their whole bank accounts in Dogecoin, Shiba Inu, just on the thought that Elon Musk is going on Saturday Night Live. That was the top. And looking back, we should have known it was the top because it was ridiculous, right? Now we're hearing from Michael Saylor, we're never going to have a bear market again. Now we're seeing all these very intelligent influencers starting up these treasury companies at the top of the market. Can they, I mean, you can go through a 1 year bear market. It won't be very pleasant, but imagine 2 or 3 or 4 years of downtrend and your hundreds of millions of dollars in the hole. Not a good look. And it's not just in Bitcoin. We're now hearing the Ethereum ecosystem is having corporate holders, top corporate Ethereum holder SharpLink Gaming endures a stock dip after their Ethereum purchase. Now, we talked about SharpLink previously. This was purchased by a group that is basically headed up by Joseph Lubin from Consensus, they're basically the main developers behind Ethereum. So they're going to effectively become the MicroStrategy of the Ethereum ecosystem, it seems. But again, I remind you, number one, Ethereum is not at the top of the market, so we have to keep that in mind as well. But we have to remember that a lot of these treasury companies that we're hearing about, quote unquote, buying Bitcoin, they're not actually buying Bitcoin in the way most people think. Most people think that they go on an exchange, maybe go to Coinbase, and all the liquidity within Coinbase is what's being sold, and that's not what's happening. I'm actually at the point where I think that the Bitcoin treasury companies like MicroStrategy, I think that they have deals with the Bitcoin mining companies. And again, this is just my opinion and just speculation because we don't know where their Bitcoin is coming from. Michael Saylor is very hesitant. In fact, he said that they're not going to release proof of reserves. And he's basically alluded to that he doesn't want the movement of the coins to be viewed by the public, which is odd. And so that means that they're either getting the Bitcoin off-chain, which we know that they are in private sales, but where are they getting the Bitcoin from? Like I thought maybe they're getting it from Mt. Gox, maybe they bought from the government, but I'm actually starting to think that they're buying it directly from the Bitcoin mining companies. Because in a previous cycle, remember I used to tell you, it was very odd that in 2021, the Bitcoin mining companies were holding at the top of the market and selling in the bear market. And the reason they may have been holding in the bull market is because if they sold, the price would drop because they had potentially thousands of Bitcoin per week that they were going to be, pushing into the market. What MicroStrategy is doing is scooping up all that extra Bitcoin. In my opinion, they're going to the Bitcoin mining companies and saying, listen, we will buy. You have to let us know how much we can buy, how much you have that you want to sell. Because the Bitcoin mining companies, they may not sell all their Bitcoin either. And so if that happens, it's a sale, but it's not a sale in the way that the market would move. Because the way the market moves is when there's no liquidity in the system on the order books, and you put a big purchase order in, the price goes higher and higher and higher until you purchase. And by the way, in this past 1 year history of MicroStrategy buying Bitcoin, on those days and weeks that we see them buying Bitcoin, the market does not move, or it moves in the downward position. And so that could be the market actually saying like they're not really buying the Bitcoin. And we know this. We know that Ethereum's SharpLink, or I should say SharpLink's Ethereum, came from Consensus. So it was just a wallet-to-wallet transfer. The same way that we saw Tether wallet-to-wallet transfer their coins from Tether's wallet into 21, the Jack Mallers company. And so technically, yes, it was a sale between two private parties, but it wasn't on the open market. And so there's no actual, there's no way for like the mark. How do I say this? It's manipulated, right? The market that we're seeing is not an open market. That's why they're making these private sales. They're just saying, okay, the market price is 105,000. That's what we'll buy it for. Because if they were to buy these coins on the open market, even if the Bitcoin mining companies were selling it, just seeing these large purchase orders entering the books would move the market. This is why I always wondered, like, how the hell are they buying all this Bitcoin and the markets don't move? I mean, you could look at the Binance exchange, you could look at the Coinbase exchange, and during these purchases, we didn't see, I was like, maybe they're just purchasing half a Bitcoin at a time or one Bitcoin at a time over the course of thousands of transactions. But the market algorithm, like the algorithmic trading bots would identify that, and they're not identifying that to push the price higher. And so where are they buying the Bitcoin? It has to be private sales. And so I would imagine most of the Bitcoin that they're buying is from the Bitcoin mining companies. And so they're eliminating inflation from the market, but they're not allowing the market to price itself appropriately. A lot of people don't understand this. A lot of people don't understand what I just said. I mean, rewind this video 3 minutes and listen to what I just said again about how the purchasing is occurring. Because if all of the Bitcoin treasury companies are doing this, or the narrative is just, oh, well, they're buying Bitcoin, that's going to push the price up, that's not true. And it's not actually doing it. I do think that some of the sales push the price up. But imagine, guys, tens or hundreds of billions of dollars over the last couple of years have entered the space, and the price has moved, but it hasn't really moved as much. And so imagine the Bitcoin mining companies either stop selling their Bitcoin or just start selling it on the open market, where the price would go. Well, if they just started buying it on the open market, the price would go down. But if they started selling on the open market, the price would go down. But if they started selling on the open market and MicroStrategy was buying on the open market, the price would definitely hit $500,000 very, very rapidly. But that's not what they're doing. They're buying these off chain. Same thing with Ethereum. And so what happens to Sharpling's price? Straight down. I mean, literally, look at this. It went from $3 a share all the way up to $80 a share. And right now, when I'm recording this, we're back down to $11. It basically did a full round trip. This was I don't want to say it's a pump and dump, because pump and dump has a negative connotation, but this is basically what a pump and dump looks like. But this is an indicator that the market is not priced appropriately, which also indicates potential end of the bull market, because this is not the only chart that we've seen this on. We've seen this on chart after chart after chart after chart. And so we're not seeing the price of Ethereum move up, even though they're quote unquote buying all this Ethereum. And GameStop also, by the way, their stock falls as the firm plans $1.75 billion raise after their Bitcoin buy. After they stockpiled over $500 million worth of Bitcoin, GameStop is raising more funds that could well fuel future Bitcoin purchases. But again, you know, the Bitcoin ecosystem is all or nothing. And so they didn't, I think they had $1.5 billion in their first raise. And so they only purchased, I think they have $5 billion in cash also. They only purchased 10% of their cash. That means they bought 500 million and they have 5 billion in cash. Well, why? And people in the, you know, Bitcoin maximalist ecosystem were like, GameStop fumbled the ball. This is why their stock is going down. It's like, the stock's not going down because they didn't go all in Bitcoin, $5 billion. Stock's going down because this whole MicroStrategy Bitcoin treasury play is not going to work if the market turns around. And smart money understand this. The hype money doesn't. And look at how close we are on this fear and greed index. Oh, you guys can't even see it. Hold on. The fear and greed index is right now at 54. We can get into extreme greed or extreme fear in one day. And so people are like, oh, we're not even in extreme greed. You know, we're going way higher. Yeah. And as soon as we go way higher, their goalpost moves. They get even more bullish. But this keeps going more towards extreme greed. And so what happens? Smart money starts selling. That is exactly what's going on here. And so, yes, retail still has retail still can move the markets, but they can't move the markets like MicroStrategy. They can't move the markets like the Bitcoin ETFs. And we've already seen that happening. And so now we have to take into the Bitcoin mining companies and all these other private sales into account also. So now we're looking at MicroStrategy's buying. What are the Bitcoin ETFs are doing? Because we theorized, and it was confirmed earlier in 2025, that when MicroStrategy was buying and they don't want the price to go higher, the ETFs sell. Well, if the ETFs are selling, does that mean that MicroStrategy is buying the ETF coins, or does that mean that the Bitcoin mining companies are not selling their coins? And so the price was going to go up by MicroStrategy continuing to buy while the miners are not selling. And so the Bitcoin ETFs, to prevent the price from going up too fast, too high, or too high, too fast, they start selling off. And so now you have all these dynamics in play. And by the way, this happens in the stock market also. It's just there's so many derivatives in the stock market. You know, you have futures, you have options on the futures, futures in the options, spreads, warrant. I mean, you have so many different derivatives that play a role in the stock market. That's why the stock market stays fairly level. Like there's very, very few times that you'll see massive spikes. And like I've said, once Wall Street gets involved, that's what's going to happen with crypto, and we're already seeing that occur. And so one of the indicators of once you see this occurring is understanding that the play is over, right? The play can still go on longer, right? Bitcoin can still go up much higher, but the MicroStrategy play is over. The yield max, covered call options income strategy, that's over. The Bitcoin play is over. The MicroStrategy play, it's over, at least for now. But the market, right, the retail, even the influencers, they haven't realized that yet. We're at all-time record highs, and they're the most bullish they've ever been at all-time record highs. You should be the most bullish you've ever been at the bottom of the market. When FTX collapsed, even though it was terrible and a lot of people were out of their money, that should have been the most bullish time for everyone. And it wasn't. It was the most bearish time for a lot of people, right? And so now we're at the top of the market, literally, like not me just saying this like we are at the top of the market, triple top this year so far, quadruple actually, double top at the beginning of the year, double top right now. And people are the most bullish. Does that make sense? Well, that's another indicator that we are at the top of the market. So Sharplings buys Ethereum, the stock pump and dumps, right? Round trips fully. GameStop purchases Bitcoin. The maximalists don't like because they only purchased 500 million. They didn't purchase 5 billion. So it's not good enough. It's not all or nothing. So GameStop should fail, right? I mean, that's literally what they're doing. And then we also hear this, right? CFTC chair is saying that every major bank will now accelerate Bitcoin and crypto services, saying they're all coming. No. She's telling us they have already come. They just haven't released the products yet. But guys, JP Morgan had their own blockchain years ago. It's called Onyx blockchain. I think it's called Onyx. And then they donated it to Consensus. And they also have their own JPM coin. And so the banks have been involved. They've been testing on the back end for years. But now the integration of Bitcoin, yes, it's going to happen, but it's not happening overnight. A lot of people now at the top of the market, they're like, oh, banks are coming in. Tomorrow you're going to be... It's like, no. Fidelity has been mining Bitcoin since 2014, and they just last year or the year, I think it was last year, 2024, they added Bitcoin trading. And this year in 2025, they added Bitcoin and Ethereum and Litecoin retirement accounts, tax-deferred retirement accounts for crypto, direct crypto trading. But that took them from 2014, almost 10 years from going from mining Bitcoin to supporting Bitcoin on their platform. 10 years. And the other banks, they don't even really want to do it. They just have to do it, right? So keep that in mind. People see this and like, oh, accelerating Bitcoin and crypto, boom, we're here, we're bullish. Well, the market already priced that in. At least that's what I see. And then it brings us to Circle and USDC. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video we upload every single day. Now, I've been talking about USDC for a while. I think, generally speaking, stable coins are the most boring thing in crypto, really the most boring thing in finance. But that doesn't mean there's no value. There's a lot of value in Circle. There's a lot of value in USDC. And one thing that I've been saying for quite literally for years, just type in the Cryptoviser USDC Cardano. Okay. I posted this video about 16 months ago, a little bit over a year ago. And the video was called Cardano Doom. USDC will not do it. And this is a part of many different videos in that series that I was talking about. This was the thumbnail. I tried to warn you. I would definitely recommend go to my YouTube page, click the community tab, and you'll see the link straight to that video from last year. And everything that I've said in that video was true about USDC and Cardano. And what we saw at the end of 2023 into 2024 was a little bit of a push from some of the Cardano influencers to get USDC on Cardano. And the Cardano, I don't know, suits in Cardano came and shut it down immediately. Immediately. Like within a few days, these influencers were turning back and saying, well, we're not going to really get into USDC. And that told me it's over because they USDC at this time stopped supporting Tron. And then what did we see? We saw Cardano founder cheering on Ripple buying Ripple buying Circle. They didn't want Coinbase to buy Circle. They wanted Ripple to buy Circle. And now we have all these promises about Cardano integrations into XRP and all of this. Guys, Circle, this is the indicator in my view. It has been for a while. And yes, I am a big internet computer bull, but I'm an internet computer bull for the technology, not necessarily for their integrations into DeFi and all that other stuff. Although it is important, and I've said that I think that internet computer needs native USDC integration. But now that Ripple has an XRP integration of USDC on their chain, and they just launched their own regulatory compliant stablecoin, RLUSD, further solidification, guys. If your favorite crypto is not integrated with USDC, by this point, it's not good. It's not good. And again, this is not me thinking this. This is the data. This is the data. If any of these chains wanted to get USDC by now, they would have gotten it. Look at the chains that have it. A lot of these are newer chains that even started after some of the chains that we just talked about that don't have it. And so why do these chains have it and those chains don't? Algorand has it, Aptos has it, Arbitrum, Avalanche, Base, Celo, Ethereum, Hedera, Linea, I don't even know what that is, Near, Noble, Optimism, Polkadot, Polygon, Solana, Sonic, Stellar, Sui, Unichain, World Chain. That's where they scan your eyeball. XRP Ledger and ZK Sync. And so these are the chains that are going, the USDC is the digital dollar. They already have connections with the Federal Reserve. They're already integrated in banks. Like it already is. It's already being used in the back end. And so these chains that don't have it, now at the end of another bull cycle, I feel really, really bad for the holders in those ecosystems. I feel really, really bad. Because after this cycle, there's going to be a shakeup. I'm telling you, this top 10 is not going to look this way anymore. Because we already see Wall Street. They're no longer looking at market capitalization, period. We've heard this from the ETF companies. They're not looking at market cap anymore. They're looking at full integration. Because if you can't even integrate with another blockchain, if you can't even integrate with one of the two premier stablecoins, Tether or USDC, how can anybody expect that chain or those chains to interact with the banking system, to interact with large corporations, to interact with payment systems? It won't happen ever. It's just a pipe dream that will never, ever, ever, ever happen. And I feel bad because a lot of people have a lot of their life savings in these coins, and it is going to be obliterated not because I want it to be, because I don't short the market the way that other investors do. But I would say that this point where we are going to rotate, sometimes you got to cut your losses. And I've said this in multiple videos over the course of the years. There's going to be a lot of people who get wrecked. And I feel really, really bad because they're not seeing the signals, right? People are saying, no, we're not at the top of the Bitcoin market. We're going to hit $300,000. And meanwhile, like I've told you, people have been buying since $1,000. Just because you bought at 105,000 and you're bullish now, they're selling. And they got a lot more to sell than you can buy. And so that pushes the price down. And that's how these market cycles work. And for everything else, when we talk about DeFi, the standard for DeFi now is connection to stablecoins, stablecoin liquidity, interoperability, connection to multiple chains. And there's still blockchains that have none of that. And there's still people who are like, well, this chain's going to be number one. Guys, you as an investor have to look at where the markets are going, where the technology is going, where the the geoeconomic landscape is going, whether you agree with it or not, right? Like whether I think it's a good or bad idea that Coinbase added a top advisor who can cause political tension within this company. Do I think it's a good or bad idea? I think that it's going to cause unnecessary drama that Coinbase probably doesn't need, especially if we are at the end of the bull market. And so these are things that we have to look at and kind of assess whether this is worth the risk or not worth the risk, right? Because at the end of the day, these are all just trades. You may feel better about the trade if you love the coin, love the technology, love the people, whatever. But these are just trades, period. And the market is going to do what the market's going to do, whether you like it, whether it's in your thesis or not, whether you think this time is different or not. Circle, USDC, and Tether, this is one of the main keys for me as we exit the bull market. And this goes for every coin, including Internet Computer, because I am not holding a coin in the bear market, period, that does not have these connections. Because by the next cycle, all of the connections that are happening now, all of these integrations that we see through interoperability protocols like Chainlink cross-chain interoperability protocol, or Circle's interoperability protocol through all these stable coins and real DeFi usage, that's all starting now. And so if a chain doesn't have that now, in the next cycle, they're literally four full years behind. And some of those blockchains are already 4 years behind because there's Cryptoviser, why don't you talk about this chain? They just launched DeFi. And I'm like, wait, they just launched DeFi? It's 2025. DeFi summer was 2020, 2021. We are a full cycle after that. And you're telling me I should celebrate a coin launching DeFi? 4 years after DeFi started, they're one full cycle behind every ecosystem out here. And as much as I don't like Sui, because Sui is a newer blockchain and they're moving rapidly and they have these integrations, there's a very high likelihood that Sui is going to be ahead of blockchains that have been around for a decade by next cycle. I mean, we're in a bull market. I may not be bullish on it now, but in a bear market, I may be bullish on it. We're going to have to kind of wait and see. But these are the signals, guys. Shopify launching early access to USDC stablecoin payments on Base. The integration of the digital dollar, USDC, is already underway, right? They're going to, eventually it's going to be where the back end is transacting in stablecoins and you don't even know it, because you're actually transacting in stablecoins and you don't even know it. It's just going to be a back end integration of this technology and capabilities. And so if the chain doesn't have this capabilities, it's not connected to anything. So what's the point? What's the point of it? What is the investment, like the draw to invest in that? Meanwhile, we have chains like Hedera that they've just launched a stablecoin studio. A few weeks ago, I reported that Hedera launched an AI studio. And obviously we've heard that Hedera is going to be utilizing some of the Internet Computer AI capabilities to power Hedera's AI. And now They're going all in on stablecoins. The Stablecoin Studio enables stablecoin issuers to easily deploy applications and oversee operations via a comprehensive management toolkit, allowing for streamlined digital asset operations. And so again, let's go back to this list, okay? And USDC is on Hedera. And so we have USDC on Hedera. USDC is becoming, if not already is, the digital dollar. USDC now can interact with the Stablecoin Studio on Hedera. Like, do you guys see how this is shaking out, how this is playing out? Like, it all comes back to USDC. Tether as well, but because USDC is built in the US, it has an upper hand. And they've been able to do a little bit more than Tether has been able to do, like tap in with the Federal Reserve. And so this is where it's all going. It's not what I want. It's not what I need. It's what is happening. The market doesn't care what I think. What we do on this channel is we try to navigate what the market is telling us. And the market is telling us that, number one, these Bitcoin strategy companies, while they may work in the long term, the time, like, think about Bitcoin when it first came out at a penny, right? Now everybody's still at $100,000 trying to chase those returns. You're never going to see those returns again. You're never going to see us go from $100,000 to $10 million in one cycle. It's not going to happen. But that would be the percentage gain that you would see. That's a 100x, right? What do we see? A dollar, we went to $100. That's 100x. It's a big difference. That trade is over. The Bitcoin Treasury Company trade is over. The Bitcoin ETF trade is over. Now we're going to start focusing on Ethereum and DeFi and this whole DeFi connection to TradFi. That's underway right now. And so if you're waiting for the narrative to tell you, it's too late already. You have to be ahead of the narrative. And so the CEO of Hashgraph from Hedera, he actually spoke recently at one of these conferences, and he said that the tokenization of real-world assets on Hedera's HBAR and democratizing access to exclusive assets, saying, we've been tokenizing from the beginning. And so not only did the market come to them, but they were also iterating as the market was changing and getting into real-world assets, getting into integrations with other chains that have these other capabilities. While we have other ecosystems that are like, no, we're going to do everything alone. We don't need USDC. We don't need Bitcoin. We don't need Ethereum. We don't need bridges. We don't need... Okay, so if you don't need all of that, and that's what everybody in crypto is using, crypto doesn't need you. Meaning the banks don't need you. Meaning American Express doesn't need you. Meaning, the big banks don't need you. Meaning the influencers don't need you. And by the way, guys, this is signals of the top of the market. Because by next cycle, we're going to have new things to worry about. We're going to have new projects that we have to learn about. We're going to have new projects popping up. We're going to have other projects that promise the world now that didn't fulfill those promises in the next cycle. We're going to have all the same issues. But that doesn't mean that we're not going to go into a bear market, that the top of the market is never going to actually hit, right? It is. And I think that we're already there. But again, a lot of people will say, well, Cryptoviser, if we go to 200,000, then, that's a 100% gain from here. But it's like, yeah, but we've been talking about Bitcoin on this channel since $1,000. So 1,000 to 100,000, I mean, that's a pretty big gain. Now you could say, yeah, but 200,000. Yeah, but what about a bear market? We could do what ifs all day. We literally could. But we're at the point in the cycle where we can't talk about what if. We have to talk about what is. And what is the indicators that we are at the top. And by the way, this is all without charting. I can make this a 4-hour video and pull up every chart and every chartist talking about it. But beware, there's a lot of people who are still bullish and do believe in this extended cycle, and maybe they'll be right. But Coinbase is saying by the end of 2025. I'm saying way before the end of 2025. I've showed you many crypto experts that believe before 2025. And remember, the moves to the upside in the market happen during very, very short periods of time. right? Maybe a few days or a few weeks, you'll see that major uptrend. And then you see the downtrend. And we've been in an uptrend for well over a year and a half now. And we are in the final stages of the Bitcoin 12 to 18 months after the Bitcoin halving, which historically is when we see these kind of moves. And these are telling us, they're literally showing you what the Bitcoin chart is going to look like, what the altcoin charts are going to look like, what all these Bitcoin treasury charts are going to look like. But that is a gift. Do you know why? Because the stock went up this high based on hype, but you know that it went up based on hype. But during the next cycle, or during even further down move in the price, people are going to say, "Oh, but the last all-time high was $70 or $80." But you know that $80 was not really the market pricing the company at that. That was the market hyping everything up. And so you'll not be necessarily, if you buy, before the pump, if you buy now, if we keep going back down to $3, you know that we're likely not going back to $80 for quite a while. And so if you buy at $3 and we go to $10, boom, you tripled your money. So there is a lot of opportunity here. And with shorting, listen, there are definitely going to be opportunities to short the market and short some of these companies, but I'm not sure this is the moment yet. Shorting is very, very risky, even if you believe the market's going down, like I do, because I don't know when it's going down, and I don't know how much more upside we have before it goes down. So this is where you really have to hedge, right? There may be a point in this cycle where I start to aggressively short. I probably would not talk about it on this channel because there are counter traders, and we know that. That's why we really don't even talk about our portfolio on this channel, and all the videos on this channel are delayed. But this kind of goes to show you, like a lot of people watch my videos, they'll say in the comments, these are what I call tourists. They'll say, well, Cryptoviser, the price of Bitcoin when you're recording this is 105,000, but when I'm looking at my screen right now, Bitcoin price is, 110 or 115,000 or whatever the situation is. And I'm like, out of this hour-long video, that's the only thing that you took. I would look at the price and say, forget about where the price is on the screen. Does what I'm saying make sense? Is it still valid? Because by the way, my video on my channel that's called The Top of the Market, let me show you. This video right here, the Bitcoin top is in, okay? I recorded this video 1 week before the video posted, 1 week. And the day that I posted it, we literally topped out again at about 109,000. We went from 109 to 103 that day. But I recorded the video a week before, which shows you that the content and the substance of what we're talking about has nothing to do with the price. It has to do with the sentiment of where we are in the cycle. That is the point. And so, yes, the price is going to be different by the time you're watching this video. The video was recorded in the past, right? But it's really the content. And that's why I delay them now, because posting a video the day that news comes out, this just creates FOMO into whatever the news is about. We're going higher, we're going lower, the Federal Reserve is doing this, the central bank is going to do this. But at the end of the day, we're looking at the macro. We're looking at zooming out and not looking at day-to-day trading, right? Because whether I sell or buy at $105,000 and $109,000, it's not really that big of a difference. And so I believe personally, we are close, if not at the top of the market. And the further we go, the closer we are. And so take with that what you will. But I want to know what you guys think down below. Do you see all of these things that we just talked about as top indicators? And do you agree with what I'm saying about these ecosystems that have not evolved and that are not gaining the traction that they need to succeed? Because the USDC one is, this is the key. And it goes for a lot of these blockchains that are not interoperated and that are not connected, because there's a lot. But there's also a lot that do have the connections. And that is what is exciting. So with that, hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Hit that subscribe button if you think that this content is worth $1.99 a month. Click the join button down below to learn more about how you can become a channel member for just $1.99 a month. So if you think that this is worth it, click join. Otherwise, I'll see you guys on the next video. Thumbs up are free. Crypto is not. Crypto on.